How's it going, guys? Today we're going to learn what's a SEN account and what's the difference between a SEN account and a normal account. Let's check it out. A SEN account is basically a normal account but divided by 100. Okay, so if you have an account, or say you have Euro USD, say for example you have Euro USD. Okay, this is on the normal account, right? But if you have a SEN account, you would have Euro USD dot M, which represents micro, or sometimes it's A, depending on the broker. That M represents the chart or the market divided by 100. So what a SEN account does, it creates a synthetic margin so that you can trade leverage markets, for example gold, which requires for you to have a lot of money initially with lower capital. So for example, say if you want to be safe trading gold, for example, on margin trading, you'd have to have roughly $5,000, $10,000, right? Which will give you for every 0.01 lot size. Okay, every 0.01 lot size, you'd have to have at least 10,000, for example. But on a SEN account, that 10,000 initially supposedly can go down to 100, for example, because it's dividing by 100, right? So instead of having $10,000 to open an account, you would only have to have $100, which gives you space to diversify, to trade more markets, to hedge yourself better in other trades, in other markets. So say for example you have a 10,000 account, a 10K account. On a 10,000 account, if you were to trade just gold alone, you could only use 0.01 on gold, right? And that's pretty much about it. If you don't want to leverage yourself too much, for example, technically you can open more lot sizes, you can do whatever you want, but then the higher the lot size, the riskier it gets, right? And if you have 10,000, if you were to have the same 10,000 but in a SEN account, right, then you can open 0.01 on gold. Then you were to open 0.01 on gold, okay, or USD. You can open 0.01 on, I don't know, maybe S&P 500. Okay, you can open 0.01 and the other futures. For example, Bitcoin, you can open 0.01 on Ethereum, right? Maybe currencies as well. So your USD, and of course you're earning a lot less because it's divided by 100. So the profit and the losses, they are related to the amount of money that you have in there. So if it's 10,000 cents, it's a lot less. The good thing about having the SEN account is that it gives you a lot more space and range, which I think is the biggest advantage, right? Rather just being stuck with one account, because you could have a $10,000 normal account, and then you would have a range like this, for example. So the middle part means the trade that you're either opening up or down, right? And then the range is like how far you would go for you to lose the capital. This is an X amount of range, right? And in the same 10,000, but in the same account, you'd have a way higher range, okay? Way longer range, I should say. I should put it that way. So that means you have a lot more space for the market to move up and down, which gives you more time and more ability to hedge yourself, or you can deposit more money later on. So basically you can manage the risk a lot better and a lot safer than if you were to just have this account alone. That's why I really like the SEN account. You can have multiple SEN accounts at the same time. You can have one SEN account that's going up, one SEN account that's going down, for example. So one account hedges the other account, for example, right? And it just keeps going like that. You could have an account that's going up and then hit a drawdown and then deposit more money. So you help the drawdown of the account, and then you can hedge it again. And with all of that you're doing with the hedges, or maybe you bought 10 markets at the same time, or you sold one and you bought another one. You have Bitcoin, you have AUD USD, you have like I said, Ethereum, you have S&P, you have gold, you have silver, you have all of these currencies. You have pretty much everything. You have indexes, and everything's just one's going up, one's going down, and like they're all diversified and they're hedging each other, right? And because you have a lot of margin, as long as you're not closing the trades, if you're not using stop loss, you have more time, right? And then sometimes as you make more profits, you can leverage some of that profit with a stop loss strategy, for example, right? Now you can do a 3-to-1 risk reward ratio. So say in 1 month you've made $1,000. You made $1,000 in 1 month, and then for 30 days, and you want to risk, I don't know, let's say $70, right? So you want to risk $70. If everything goes bad and you lose that $70, you end up with $930, right? In a good month, for example. And you want to use the $70, right, to try and leverage it, to try and try and 10x that money. You can try to turn 70 into 700, right? If you make this month and you actually turn the 7 into 700, now you have 1,000 plus 700, right? Now you have $1,700, right? It's almost double the amount of the month just with one trade that you got to write from Ascend accounts, right? That's why I really like the Ascend account, because it gives you the margin for error, because the $70 should represent a margin of error. If you lose the trade, you still have profits that month, but if you make the trade, you can leverage yourself. So you have only two ends. You either make money or you make more money. You make less money or make more. And as you're working constantly, depositing more money and growing the capital, and then slowly diversifying to other markets, which we're going to talk about later, right? Stocks, treasury bonds, real estate, this, that, a little bit of crypto, or depending on what portfolio and what aggressive and how conservative or not conservative you are, you can take this into long term and actually create capital with it. You can create a portfolio with it on the long term. This is why Ascend account is important. So that's why I'm pretty much picturing the whole structure already in a 10-minute video, because I want you to understand the importance of doing this, right? Because like people say, oh, you need to lose money for you to learn trading. You don't need to lose money to learn trading. You don't need people who are telling you that you need to lose money to learn trading. They're trying to scam you. You don't need to lose any money at all to learn strategies, to learn techniques, to learn risk. You don't have to do it, right? Some people, they have to lose because unfortunately they don't learn the easy way. They have to, bust their ass off and they lose everything, so they learn what not to do. But don't be this type of person, right? You can be the person who learns from other people's mistakes, and then you don't lose anything, right? With that being said, Forex is still high risk investment, and you can lose money with it. It's not guaranteed money, right? I always said in the videos, but you don't need to do everything wrong and just put $100,000 in one thing. That's why I always say that is good for you to start. If you were to start, if I was starting over in Forex or high risk investment, I would start over with a Ascend account, because it's possibly the only thing in the world in which you can start with as low as $10 initially, and you have access to trading pretty much all of the markets, right? Depending on which broker you're using. And with all of that being said, this is the video. I know I said a little bit more than I should have said. I was supposed to make this video a little easier, but I'm just putting out content because I want to teach you guys how to really do this thing here in the safest way possible, even though there are risks involved, and you have to be very aware of it. Okay. So yeah, that was the video. So if you have any questions, send it down below in the comment section. All right, I'll be happy to answer. And please understand that this is high risk investment. Don't put money that you cannot afford to lose in here, because otherwise you will screw yourself up. I'll see you in the next one. Bye. Let's keep studying.